Hello everyone and welcome to Business Depot's budget breakdown with beverages, of course, the only way to do the budget. For those that don't know me, my name is John Knight. I'm the Managing Director here at Business Depot. Joining me today, we have Jacquii Reeves, our Head of Tax at Business Depot, and Rebecca from our Sydney office. Guys, let's get straight into it. Obviously, the economy is in unprecedented times. We feel like we've been saying that for years and years now. But we're in this high inflationary environment, and obviously in the budget measures, they projected inflation to reach a high of 7.75%. It's not a place the economy has been in for a long time, and obviously that has some flow-on effect to business. My first impressions of the budget was it's a pretty classic. New CEO comes in, cleans out a few of the old initiatives, resets the goals, resets what we want to focus on into the future. Jacquii, what were your first impressions of the budget?
John, as the tax nerd here tonight, you know I'm always going to go down the tax measures. So whilst I'm super excited that there isn't a lot of tax changes pre-Christmas, given how busy we still are in the industry, I'm also a little disappointed that we're not moving towards some serious tax reform, but maybe we'll see that next year.
Yeah, Rebecca, first impressions?
I think this budget's starting to do a good job of repairing Labor's reputation for being a bit spend first, think later. Rightly or wrongly, they have that reputation in this country. Liberal is always known for their economic policy, but this has really repaired that. They're being quite spendthrift and really quite sensible.
They're really trying to take a different approach, trying to not have that as something in the next election, maybe. Anyway, we said we wouldn't get political, but anyway, we just did. Of course, new government coming in, old government had some initiatives. We had an early budget from the old government back in March. Some of the old initiatives, Jacquii, that have been scrapped, what's gone?
Yeah, so for probably all of the policy nerds out there, we've had probably a bit of an unprecedented event this year where we've had an election, and a change in government. So as soon as we go to election, things go into a caretaker mode. So anything that was before government, basically, once you're in caretaker mode, falls away. So from the last budget, things that we aren't going to see reintroduced by this government initially is the introduction of the patent box regime, where you would have had a concessional rate of tax for certain patents.
That was really startup focused, wasn't it? Yeah.
Startup and biotechnical, medical, a few other industries that they were sort of, targeting those amendments for. There were going to be some industry discussion and consultation around car parking fringe benefits, just to redefine that after some case law. Looks like that's not going to continue.
Was that very small business focused, or was it?
Probably large business focus as well, because some of those car parking rules were in relation to bigger corporates near commercial car parking stations and the like. So individual and corporate tax residency. So you might have heard us kick around the term around the bright line residency test for individuals, which at the moment we've got a number of tests for residency, and they were looking to restrict that to go, okay, these days and a certain amount of factors in it, to just sort of draw a line in the sand rather than it being a bit more grey.
So it was aimed at trying to give us more clarity on residency of individuals, was it?
Correct, yeah. But also make things more complex, because residency is probably not a clear-cut decision. So,
what about Div 7A? Because that's something that we talk a lot about with clients. They had proposed some amendments. Are they still in? Or?
Look, Div 7A and private company loans has been on the tax amendments for, 2018. We had some consultation papers and Treasury papers. Nothing's been proposed. So I think they're happy just to leave it as status quo at the moment. Probably given the information that the ATO has put out around, reimbursement agreements and Div 7A and trust entitlements and what they're doing in that area. Maybe the government's comfortable that they're
just going to roll with it.
That they're going to roll with it for now.
Yep. Anything else scrapped?
Being able to self-assess the effective life of intangible assets. So that was a measure in the previous budget. And it won't proceed. And I guess this government feels like that's going to avoid any proposed, like integrity concerns with that announcement.
Cool. Okay, what about what we talked about in previous budgets that has remained and is going to continue with this government?
Yeah, so I think the big one that was in the media in the lead up to this budget was the stage 3 tax cuts. And whether that was just a bit of a media beat up in the lead up to the budget, that they were talking that Labor would potentially delay those introduction or to cut them all together. but there's no mention of it in the budget. So at the moment, for the 24-25 financial year, so 1 July 2024, they're going to increase the top marginal tax rate threshold to 200, income over 200,000 will be taxed at the 47%, and they're going to basically get rid of that income tax bracket in the middle.
So correct me if I'm wrong, that bracket in the middle, the legislation is still in place. I think it's from like 40,000 through to 200,000.
45.
To
yeah. 45 to 200, yeah.
45,000 to 200,000 is a flat rate of 30%.
Yeah.
This is from 1 July 2024.
Yeah.
And I think the thing that's not talked about enough with these stage 3 tax cuts is that fundamentally changes our tax system, because you now can earn between $45,000 and $200,000 and you'll pay the same percentage of tax.
Yep.
What else have they kept?
Okay, so this was already announced pre-budget, and the consultation is currently with Treasury, which we had a lot of clients asking us about this for pre-30 June, was the skills boost and skills and training boost and the technology boost. What this does for businesses is it gives you 120% deduction on certain expenditure for digital adoption and training course for training your staff.
Yep.
It is limited to small businesses with an aggregated turnover of less than 50 million. And it's for eligible expenditure from 29th of May 2022 to 30 June 2023. The key thing is, and this was exactly in the same budget measure, is that you won't be able to claim that until your 2023 tax return.
Yeah, I struggled to get excited about 120% deduction for something. Rebecca, do you feel the same way?
It's really a waste of everybody's time.
What do you really think? But you spend $100, you get a tax deduction for 120. If we've got a 25% tax rate for the extra $20, it's $5.
Yeah.
So as a business owner, I struggled to get too excited by it.
Yeah.
What else have they kept?
Okay, so the other thing that wasn't in the previous budget, to my memory, but I could be wrong, always happy to be wrong, but FBT on electronic vehicles, and this has had a lot of press. Obviously, from a environment perspective, trying to encourage people to buy more electronic vehicles and to reduce our carbon impact, is they're going to remove the FBT for employers on low or zero emission vehicles. Vehicles have to be below the luxury car limit for electronic vehicles, which is about 85K. And they're going to lower the tax on electronic vehicles, which our reading of that is presumably that's going to be import tax that they're going to reduce.
So
on that.
import, do you think it's luxury car tax potentially as well?
Look,
I don't think so.
Not from my reading.
Still referring to luxury car limits, I don't think it'll be the luxury car tax.
So we're still lacking detail. We don't have legislation on that one yet.
It's had a couple of reading speeches, but it hasn't been finalised yet, so it's still before Parliament.
Yep.
And I think the key thing for our employees out there, so if you are getting an electronic vehicle, your employer doesn't have to pay the FBT, but it still gets reported in your tax return. So you don't pay tax on that, but it goes towards your taxable income or adjusted taxable income.
Sounds like there's still a lot of work in there for accountants, in that we've still got to calculate it. Don't pay FBT on it, and we've got to report it.
Correct. Still got to calculate it, and it impacts people for things like Medicare surcharge, childcare subsidy, family tax benefits, child support, all of those extra measures.
Yeah, okay. Rebecca, what about other key budget measures that are in there? What did you see?
Well, like I mentioned at the beginning, it's a bit of a spendthrift, so there's not a lot in there, but it is a Labor government, so some of the measures have been very family focused. So we're looking at cheaper childcare. They're investing $4.7 billion over 4 years to really help getting families back to work. That should get 1.6 million people back in the workforce, which will also be good for business, because that's going to help increase the available labour in the country. Which
is probably the biggest problem businesses are facing at the moment.
Absolutely. It also helps with equity between, men and women, because as we know, traditionally it's the females who are really suffering from that lack of affordable childcare in the country. There's going to be $536 million spent on extended paid paternity leave to 26 weeks. At the moment, government subsidised paternity leave is 13 weeks, so extending it to 26. That's for men and women.
And that steps up, does it? It steps up over time?
No, it's going to be 26 weeks once it's enacted.
Is it? Okay. And that's now men and women can use.
That's right. So it's a family measure, not specifically a women measure.
Yeah,
they're also looking at really spending a lot of money on education. So they've got 4,000 university placements that look to be subsidised, focusing primarily on teaching, IT and healthcare. So very specific industries where we've got skills shortages. And they're going to be subsidising 480,000 TAFE places, so fee-free TAFE places, which will cost about $850 million.
That sounds like something that came out of that job summit. I mean, as a business owner yourself and the clients that you advise, the impact's going to be quite some time out before you really see that, isn't it?
It's going to be several years till these people actually get through their education and can make a really good difference. But like we know, you need to start somewhere.
Yeah, good. Jacquii, did you see any other sort of key measures in there that people need to be aware of?
Oh, I'm always going to get a little bit excited about the tax measures, even if they were only a light sprinkling, John. Some of the COVID-19 grants that businesses got, particularly in New South Wales and Victoria, not all of them were exempt from tax.
So these are like the state-based grants?
Yeah, like what was it in New South Wales, Becca? It was the job...
job
wage, whatever that one.
There was a whole range of them at that point.
Anyway, but some of them weren't included in the category of non-assessable, non-exempt, and they've just expanded that list. There are a number of them, so we will put the full list in our blog. Of course, I think this was not unexpected for this budget. There's some targeted measures for multinationals. They're increasing funding for ATO anti-avoidance, so they want to make sure that everyone's paying their fair share of tax. And for big corporates, they're making some changes to the off-market share buybacks for listed companies. So I think not unexpected in those tax measures.
Sound like there's a lot to get excited about in there.
No, for tax nerds there are, but probably not so much.
So they've kept the stage 3 tax cuts. How are they paying for what they're spending then, Rebecca?
So this is the part that unfortunately gets me excited because I am an accountant, so I like when people stop spending money. Budgets are always my thing. So they've cut back on what's being deemed wasteful expenditure from our previous government. So we're looking at $2 billion being saved by cutting spending with consulting firms, and another $3.6 billion in advertising, travel and legal expenses, and around about another $10 to $15 billion they're saying is being saved by axing infrastructure programs, but they're redeploying that money elsewhere.
Yeah, okay. So to wrap things up, what's your quick view, Rebecca, for business owners? Good, bad?
Not really a lot.
Not really a lot. You agree, Jacquii? Anything to add to that? What about for women generally? I know they've continued with the women's budget.
They have continued with the women's budget. The women's budget still really involves a lot of family measures, which are always really great. And they've also committed some additional expenditure to battling domestic violence, which is always important.
Yep, retirees, whether you're self-funded or not. Anything, what's there?
The only thing I was just going to throw in there for retirees quickly was that they have continued with the halving of pensions for FY23. That was announced in the last budget and it got passed before we went into
So that's for all the
mode.
self-funded retirees who are drawing a pension out of their self-managed super fund. They don't have to take out the full standard amount.
And I think that was to combat some of the falls in the share market, so that if they wanted to retain if they didn't need the funding and they wanted to retain it in their fund, then that was the measure.
I know we always have a lot of those in the property industry, real estate agencies, etc. that listen in. Rebecca, anything much in it for them? Or?
Well, the new housing accord's probably relevant to the real estate industry and the construction industry as well. So the government's targeting 1 million new homes over 5 years starting from 2024. And to start that off, they're going to be investing, along with industry, $350 million in 10,000 affordable homes in the immediate, and that will be matched by the states with another 10,000 homes.
So it's really the impact on the property industry from a supply and demand sort of perspective. Obviously rents are going up, and so if there's more supply that comes into play. Okay. Anything quirky you saw or anything that surprised you maybe within the budget, Jacquii?
So my surprising element was that there was a previous budget announcement where they were going to limit businesses where they couldn't take any more than a $10,000 cash payment, trying to really crack down on the cash economy. And that measure has been scrapped. So it seems like we're targeting amendments for big corporates and multinationals, but we don't seem to be worried about the cash economy anymore.
Economy. Yeah, it sounds like it'd be something that I think the community would support, not having a lot of cash transactions, big cash transactions.
Potentially, but I mean, you talk to a lot of tax experts out there, and the cash economy can sometimes be a bigger risk to revenue than multinational tax avoidance. So, yeah, look, I don't know. It just was an obscure measure for me that I thought we would be wanting to collect. Like, don't drop it. Let's try to collect as much revenue as possible.
Yeah, Rebecca, anything quirky or anything funny you saw in there?
Just something quite silly in regards to self-funded retirees mostly. Focus on grey nomads with a caravan park upgrade. $48 million being spent on upgrading caravan parks. So I'm pretty excited about 20 years from now.
Yeah.
They'll be old again by then, though, won't they? I like that actually gets money into the regions and that actually encourages that.
Absolutely.
But yeah, it's a little bit quirky and a little bit very targeted, isn't it?
Yeah.
Look, guys, obviously the devil is always in the detail when it gets to budget time. Obviously, many of these announcements are not legislation yet. Some of them are, some of them aren't. We will get a lot more detail out to you in our usual budget blog, which will come out sometime tomorrow, so keep an eye on your inbox. If you're not already subscribed to receive that, please jump on the website businessdepot.com.au and subscribe. Or as always, if you've got any questions as to how the 2022 second budget for the federal government affects you, please feel free to reach out to your usual contact here at Business Depot. Thanks, guys.